Prime Minister has been speaking to local radio this morning and she's adamant tax cuts are the best way to grow the economy despite the turmoil in the markets and the Bank of England bailout.
Yeah. Some economists predict that this could have a detrimental impact on the housing market. Interest rates forecast to reach up to 6%. Meanwhile, as energy costs are due to rise from Saturday, putting pressure on families, people are being urged to submit their energy meter readings over the next week.
Money-saving experts and regular host of this show, Martin Lewis, joins us now. Martin, can you calm everything down, or are you also worked up?
This is a very difficult time yet again. We seem to yet again be lurching from turmoil to crisis. And the number of times I feel I've been on here talking about an unprecedented situation, I've done it so many times, it's almost precedented now that we are in another crisis mode. Look, it is very difficult what is looking to happen in the mortgage market and what's going on with interest rates. We've spent 6 months talking about the energy crisis, and suddenly we've been, and it looks like, you know, this is self-imposed, the harm that is happening on the mortgage market right now. That I saw last night an interview where the government seemed to be saying this is happening everywhere in the world. No, what has happened to our market is specific to the UK based on the decisions that were made in the mini budget. And the best way I can possibly explain that to people, I normally am very, very anti using household finances as an analogy for the economy because, you know, the country can print money and makes money when it spends money because it comes back in. But an easy way to think about it is when I talk about borrowing, I always say, if you're borrowing, make sure it's for a one-off, planned, specific, budgeted for purpose. Never borrow willy-nilly just to cover your everyday spending habits. And so the markets were expecting the big debt to come from energy bills because that had been pre-announced, and they were comfortable with that because that's that one-off purchase. But then suddenly we had the income tax cuts, which were the willy-nilly spending, and that has spooked the markets. And the government may be saying tax cuts are right, and maybe in the long run they will be proved to be right, but like in comedy, timing is everything. And to throw all those things together has absolutely spooked the markets out there and made us look like we are a nation of comedians, frankly. And the thing about the markets, it's easy to dismiss them. It's easy to say this is city boys and girls doing their stuff and we don't care about them, but they are not dispassionate commentators. They're not just standing on the sidelines saying we don't like that. They are controlling billions and trillions of pounds of money that move major economies. And the impact of the markets not liking what the government has done means that the pound has dropped substantially. Well, that doesn't just make our holidays more expensive, it makes our imports more expensive, which factors into our already high inflation problem and the fact prices are going up. Yes, it helps some exporters when they're selling goods abroad. And it means that the government's cost of borrowing started to rocket, so much so that we've had to spend £65 billion to intervene on it. So the idea that this is planned and everyday and normal, I'm afraid, if that is what the government is claiming isn't true, they would be better to argue. I'm not saying this is the right argument, but I'd have more sympathy if they said, we think the markets have got it wrong and we are going to stick it out. But if the idea is this was all going to happen and what the Bank of England had to do yesterday was just the same normal processes is going on in other countries, well, that's just not correct. And I hope it isn't going to keep on spinning that line. I was starting to hear it coming out last night. I hope it isn't going to continue it because there are very, very few people who believe that.
Yeah, we're going to talk to Chris Philp, Chief Secretary to the Treasury, straight after we've spoken to you, Martin, so we will find out. There are a number of questions coming in, and I'm going to put one question that was put to me. And this is about the energy guarantee, the price guarantee. Now, I was asked about this £2,500 cap. And the reason I call it that, Liz Truss, back in September, Liz Truss, Prime Minister, said, we've made sure, this a couple of days ago, we've made sure no family, no household is having to pay more than £2,500 on those energy bills. A photographer said to me that they rang British Gas to ask why their energy bill was going from £3,000 to £5,000 because they understood they would be paying no more than £2,500. Can we just dispel that figure once and for all?
There is no £2,500 in any figures that has any meaning to anybody. There is no cap of £2,500 what you can pay on energy bills. If that was the statement the Prime Minister made, it's a miscommunication. It's a miscommunication I've seen repeated in many areas of the media as well. I have to say, you'll be aware I put something out on social media yesterday in capitals saying there is no £2,500 cap. What there is a cap on the standing charges, the daily charge you pay, and the unit rates, how much you pay for each unit of gas and electricity you use. That's what's capped. The £2,500 figure is what someone on what the Ofgem noted typical use would pay on that cap. But if you use more, you will pay more. It is a cap on your unit rates. It limits how much you pay for each unit of gas and electricity. It is not a cap on total costs. The old price cap wasn't, and the new price guarantee, which is effectively a 2-year long price cap, isn't either. And that this new price cap is more expensive than the current one. It's 27% more expensive on average. It is a lot less than it would have been had the new price guarantee not come in, where people would have been seeing bills easily double from where they are now in January. But it is still going to go up, and it's still double what it was last winter. The most important thing to talk about on energy at the moment is meter reading week. And you'll note my language, I'm calling it meter reading week. That is quite deliberate.
Martin, before you go that, sure. can I just put a question to you that's come from Tiff on exactly this? Tiff said on email, I've been with my energy supplier for 3 years, but I haven't submitted a reading to them in all this time. I'm scared to do so now, as I feel they will say I've been using far more than they estimated, and I will owe a huge amount. I live in a 2-bed semi. As of October, my yearly bill was £4,345. I'm really worried. I fear I'm not going to be able to meet the cost. So Tiff's scared of actually doing that meter reading, in case they've been underestimating what she's been spending.
That's obviously an unusual situation. They may have been overestimating what you're spending too, so there could be some positives. I would always advise people, at some point you have to bite the bullet and get on with this, because you do owe that money and it will come back at some time. The sooner you deal with it, the sooner it can be managed. Do your meter reading, find out what happens, talk to the company as soon as possible, tell them the situation you're in, tell them that you're scared. Hopefully they'll be able to manage a payment plan if you're vulnerable in that situation. And always communicating with someone you owe money sooner rather than later is better. I mean, you may be in a better position than you think you are, but doing nothing is a mistake. So I would urge you to get on with it. For everybody else, what I would say, the reason for doing a meter reading now is on Saturday, the vast majority of people's prices change. For 85% of people in England, Scotland and Wales, they are going up by an average 27%. For some of the rest, they're going down. If you're on a fixed rate, an expensive fixed rate, your price will be coming down. Now, that means we have a line in the sand. And what happens for people on direct debit and payment in receipt of bills is energy firms are estimating your usage. So they might assign some to the cheap rate and some to the expensive rate. And you don't want there to be a discrepancy. Discrepancy could be in your favour, but generally you want it to be accurate. So doing a meter reading around the time that prices are changing, well, that puts you in a position that there'll be no discrepancies. Now, I'm saying meter reading week this time because in April I called it meter reading day. The website's crashed, the phone line's crashed. I'll take some of the blame for that one. I don't want that to happen this time. It's not good for people. They get frustrated. The people in the call centres get abused. And most importantly, it stops vulnerable people calling their energy company. So do it today, do it tomorrow, do it the next day. Most firms let you submit the reading, so take the reading today, but you can submit for up to a week, and in some cases up to 2 weeks after the date. So if you can't get through, don't worry about it. Do a couple of days later. You don't need to do a reading, by the way, if you're on a smart meter that works, on a prepayment meter, or you're on a very cheap fix where the price won't be changing. So everybody else should be doing a meter reading, but if you've got a working smart meter, you don't need to. But I'd get your meter reading done in the next few days and submitted in the next week or two.
The other problem that's emerged in the past couple of days and weeks are these scam texts suggesting you can click a link and get the £400 that everyone's entitled to. The point about that £400, of course, is that your energy company will already funnel that towards you. But Alex on email says, I have my gas and electricity split with 2 different companies. So how will the government's payment work?
Well, this is the £400 paid across winter, paid at £66, £67 a month. I'm going to answer the question by calling it its proper name. This is the winter electricity payment. It is only paid on your electricity bill. And So therefore, you've got two companies. It doesn't matter. This will come off your electricity bill. Now, having two different companies mean you can't split it. Some on prepay, maybe it will get a voucher and they will be allowed to use that voucher on gas. But technically, this is a payment on your electricity bill. It will come on electricity. The other thing I just want to tell for anybody on prepayment meters, there may be an opportunity for the next day or two for you to keep the cheaper rates that are available now, not cheaper rates that are available now into October. That's because with some prepayment meters, you get the rate on the day that you top up, and that rate stays until you top up again. Now, this does not work on gas meters, and this does not work on smart electricity meters. This will not work with E.ON. This will not work with Scottish Power. But if you're with another company and you have a non-smart electricity prepayment meter, if you can afford it, and I know many on prepaid don't have the cash, but for those who do, then topping up as much as you can now may keep your current rate into October or possibly November until you top up again. The energy firms say it should work, but they reserve the right to claw back the money, but they are not planning to. So if you've got the cash, it is worth trying in those specific circumstances. All
right, and one last question, because we know the Minister's standing by, because lots of people are getting in touch with mortgages over the last couple of days and what's happened, and there's real fear with mortgages. Martin, Joanne says, is it worth applying for a mortgage now? Is it best to wait until everything settles down? And Mina's saying, my fixed rate mortgage comes to an end in July 2023. I can't remortgage till the 1st of May. Worried about paying the fees to come out early in order to fix now because they're so scared about what's happening with mortgages. And I think over 900 mortgage products were taken off the shelf over the weekend, weren't they, because of what's happened?
The mortgage market is perverse right now. We even have an inverse yield curve where 10-year mortgages are cheaper than 5 and 5 can be cheaper than 2 years. So if you can fix the longer, that is worth looking at. Absolutely. If you have a variable rate mortgage or a fix coming to the end in the next 3, 4, 5 months, I would be looking at a mortgage, trying to get a mortgage now. Go onto a comparison site to see what's available for you. Then check your existing company to see what it'll give you. And then mortgage brokers are worth their weight in gold right now. Go and get yourself a mortgage broker. For those thinking of breaking their fix, and there is a logic to it, but it is not right for everyone, you want the mortgage broker to do those numbers. But I think we need to remember, if the prediction is right, that mortgage rates are going to go up to, the UK interest rates are going to go up to by 6%. That will be catastrophic for mortgage holders. First of all, because for every 1% your mortgage goes up, you're paying £600 a year more per £100,000 of mortgage. They've already gone up 3% compared to last year, so that's £1,800. If it goes up another 3%, that's £3,600 a year per £100,000 of mortgage. And many people's mortgages are bigger. The second problem, if UK rates go up to 6%, is those are the cheap rates. But once you start applying, you have to pass an affordability check. Clearly, many people will start failing affordability checks at that rate. So they'll either be stuck on only their own company's deals or going to a standard variable rate. And worse, because we now have a risk to house prices. That's not a prediction. I'm saying there is a risk that house prices may drop. They may not. They may continue to go up. And if house prices drop, that will hurt people's loan-to-value ratios, which will make it even more difficult to get a cheap mortgage. So there is a ticking time bomb going on in mortgages if UK interest rates follow what the market has predicted and go up to 6%. And I know you've got the minister on next. I know they're talking about we need to keep on our path. What I would like to know, if you wouldn't mind asking them, what specific measures will you put in place with the Bank of England, with the financial regulator, to protect mortgage holders if UK interest rates rise as sharply as is predicted? Because otherwise, we're going to have a major mortgage problem with arrears, and that will have a massive knock-on to the rest of the economy. What plans are being made today to prevent that is what I'd like to know.
Martin, thank you.